You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hi, this is Tom Cock. Everyone loves getting something for nothing, right? I mean, free is such a great word. We used to use free with our in-person classes. We used to give away blueprints free. You know, we're marketing guys. We understand that, you know, you love that word too. I even remember once, I won't say where it was because I don't want to defame anybody, but I remember a certain store once that gave away a free Kit Kat bar, you know, the candy bar. I drove by, there was a line out the door for a free Kit Kat bar. So people love getting something for nothing. The definition of free, by the way, is without cost or payment. And that's why I read recently with great interest that apparently you are taking people up on that. People like TD Ameritrade and E-Trade and Charles Schwab. Many of you are opening up trading accounts, retail client accounts, and trading stocks for free. Wow, I can get in and buy Disney or Boeing or Hertz for free. Look at these numbers. TD Ameritrade said recently that retail clients opened a record 608,000 new accounts in the first quarter. E-Trade says it was 363,000. Charles Schwab, 609,000 new brokerage accounts in the quarter so that you can trade all those stocks free. And I love reading these quotes. I'm sorry. If this is you, if I'm picking on you, I guess I feel kind of bad. But here's one of those people that said they ran out and bought stocks. Here's his quote. I feel like everything I buy, I watch pretty closely, and if it's something that's not doing well, I'll generally try to put that money into something that is doing well instead. So wait a minute, I want to make sure I have this straight. You bought something, it went down, and then you said, well, I got to sell that and buy something that's gone up. Isn't that buying and selling low and buying high? I don't know. You repeat that enough. By the way, this is the same person who said, they bought some gun manufacturing companies because that it might do well in election years. I guess things are going to get rougher at the polls than I thought. But then they jumped into shares of oil giants, airlines, car rental companies, all companies he thought would benefit when the economy rebounds, which they very may well. I mean, I have no idea how long it's going to take for companies like Disney or Alaska Airlines or, wow, even more locally, Boeing to come back. So, okay, these are, by the way, young people, generally it says, in their 30s, their first time in the market, and they see opportunity. I have no argument with seeing opportunity. I think there's a lot of opportunity to buy stocks. I just wouldn't buy them one at a time. Why not? Well, let's look at a couple of the facts about buying individual stocks. First of all, about 90% of the trades in individual equities are done by institutions. You know, mutual funds, hedge funds, the people that spend millions of dollars a year examining those individual companies. And by the way, those institutions discovered about mid-March that companies like Boeing and Hertz and Disney were going to have a really tough time here for the next period of time. Who knows how long? So every time you're buying or selling something, the person on the other end of that trade is likely one of those large institutions. Number two, individual stocks, well, they can go to zero. Oh, yeah, it's happened. There was this bank called Washington Mutual, the energy trader called Enron, et cetera, et cetera. Companies come along, do well for a while, and then go to zero. But here's maybe the most important part. There's no track record of any active manager. That is, someone buying and selling stocks that have done better over a long period of time than just owning a globally diversified portfolio of basically the entire market. You know, we've told you for a long time, if If you're going to do this on your own, just go buy VTWAX, VTWAX. Vanguard's Global Mutual Fund holds close to 9,000 securities around the world and does it at a very low price. That'd be my recommendation. But look, if you have to do this, if you just say, but I can see Boeing going from wherever it's trading today, 130, right back up to 400 where it was, or Disney or Carnival Cruise, whatever it is, you got to do it. You meet these requirements, and I'm okay with it. Number one, if you have maxed out, I mean put every dollar you could into your 401k, and if you are eligible, have financed your Roth IRA and done that in a globally diversified portfolio, that's one thing I'd be okay with you buying individual stocks. Number two, if it's less than 5% of your holdings, okay. And number three, if this is money you will never need again. By the way, this should not be money you're using to try to buy a house or a car or anything in the short term, because no one knows how long the stock market may be in a bear market. By the way, here's what I want you to do. I want you to go ahead and make those purchases, right? Make a note of it. You're going to know on your taxes anyway in a few years if you go to sell them. And then I want you to call me in 20 years, and I want you to compare the returns of those individual stocks you bought to the VTWAX. Then we can have a discussion about how smart you were about buying individual equities. I'm Tom Cock.
Talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.